Bearded Realtor. Hey, welcome back to the channel. Hey, in today's video, we're going to talk about investment property and the types of loans that you can use for if you're thinking about investing here in the state of Florida. All right, so I got my man JT here with me. He's going to break down the loans and the types of loans that we can use to buy some investment property. Okay, all right, so stay tuned. Go ahead and get into it, JT.
Hey guys, how we doing? Jonathan Torres of Future Home Loans here again. If you're looking to get into any type of investments, I highly recommend it. I dabble in it myself tremendously, and it's definitely the path towards financial freedom, not only for yourself and your family, but also, you know, leaving a financial legacy for your children. You know, that's cash flowing income that you'll have forever, right? So if you currently own a home, or if you don't currently own a home and you want to purchase a property, you can purchase it as a primary residence, qualify for any type of loan, move into it, do the renovations in it while you're living there, and then you know you sign an agreement stating that you're going to live there for 12 months, right? So once that 12 months is up, great news, you can go look for another property, move into that one, buy it as a primary residence. You qualify for all the different types of loans: VA, USDA, FHA, and conventional. Now for FHA, you can only utilize it once. So if you already have a mortgage, you will not qualify for any type of FHA loan, just an FYI. But the investment portfolio, the investment product, if you find something, you already own a house and you want to buy it as an investment property, you're looking 20% down at least. The good news about that is you're not going to have any type of mortgage insurance. The rates on investments are a little bit higher, but they're still absolutely fantastic. And financial freedom is a really nice thing. You're allowed to have 10 mortgages on your credit bureau. So you'll be able to buy 10 different properties, which is great news.
Okay, so let's talk a little bit deeper about some of the things you just mentioned. So for someone who already has an FHA loan, they can't purchase another house on an FHA loan. Is that what you're saying?
Correct. Yeah, they'll have to switch to a conventional loan in order to qualify for that. And the minimum down payment on that is going to be 5% if they're moving into it as a primary residence. If it's going to be an investment property, then the minimum down payment is going to be 20%.
Okay. And so as far as so since for myself, those who have VA loans, they would have to go through that same process of getting a conventional loan, right?
Correct.
Okay. And so the time span doesn't change between loans of how long you have lived in a property, does it?
No. So I mean, typically you're stating that you're going to live there for a year. However, you know, life happens, right? So let's say you're going through a divorce, or you know you have quintuplets or whatever it may be, and all of a sudden you have to purchase a bigger home, right? That's going to be a reason to move out of that house sooner than 12 months.
Okay. So it sounds like to me you can essentially use, if you already have a FHA or a VA loan, you can basically go to a conventional and purchase some investment property.
Yeah, 100%.
And then, so are there any criteria for as far as going to a second loan, credit score? Does any of that DTI and all that come into play? I'm sorry, debt to income ratio, does that come into play?
Correct. It 100% will. You've got to have good credit, right? So 640 or above, and your debt to income ratio is going to you know, fall in line when it comes to that. Now, if it's an investment property and you already have it rented as a long-term rental, let's say you have somebody who's you know who wants to rent it, your mortgage is going to be $2,000 a month, you're charging them $3,000 a month, we can utilize 75% of that income towards your income. The only things that you have to have is an executed lease agreement saying, okay, I'm going to move in August 1st, and first month's rent. So you have to have a check from that specific person, deposit it into your account, and we'll be able to utilize 75% of that income, which is fantastic.
Okay, so that brings up another good point I want to ask you about. So if you have an FHA or VA loan and you lived in there for over the time span, can you refinance to a different loan? And what are the pros and cons about that if you're going to purchase another primary property, such as a VA loan or FHA loan? using those benefits?
You should always be thinking about refinancing, right? So especially if it's an investment property. Let's talk about if it's your first time home purchase and it's an FHA loan. FHA loans have mortgage insurance on them, and you have to pay that throughout the entire duration of the loan term. Once you're 20% vested, right? Let's say the house 3 years down the road, your house appreciates an additional 20%. I highly recommend transferring that FHA loan and refinancing it to a conventional loan, because we'll be able to, as long as the house appraises for a 20% increase, we'll be able to remove that mortgage insurance from you and get you into a new loan for much less.
Okay. And so with that process, with the person they have to pay the down payment, or they just have to pay straight closing costs if they refinance and went to a conventional?
Great question. Great news. You can roll all of that in. You can bake it into the cake, as I like to say. The only out-of-pocket cost that you're going to have is for that appraisal. And appraisals are typically around $500. Depending if we're in a crazy market like we are now, you might have to pay rush fees. So if anybody is looking into a new career, become an appraiser. There's not enough of them out there.
Okay. And so VA works the exact same way FHA. If I was to purchase another property, I could essentially refinance to conventional and then buy another primary property with my VA loan, correct?
Correct.
Okay.
Yeah, as long as it's not a current VA.
Gotcha.
And if you don't have enough eligibility, then you would have to refinance that current VA loan to a conventional. Then you can purchase a new property.
Okay.
Under that VA eligibility.
Okay. So you would essentially say that these loans are available for you to buy investment properties, doing the way you said, staying for a year, and then you can purchase another one because life happens. So you could essentially use these loans to your advantage to purchase more property, up to 10 on your credit report, correct?
Correct, up to 10.
Okay. So as you can see, there's plenty of ways that you can get financing to purchase investment properties. JT has just given a great example, giving us some great info and giving some great value of how you can buy more investment properties. So don't feel as though you can't buy investment properties. You can. As long as you have the credit, the DTI is low, he can make it happen for you, okay? So you got anything else for the people?
That's it, guys. Jonathan Torres here, Future Home Loans. If you're looking to find me anywhere, it's at Jonathan Mortgage, whether that be Facebook, Instagram, LinkedIn. I'm here. Come check me out, and I'm happy to help.
All right, so that's it for today. I'm gonna definitely have JT's information in the description down below. You can reach out to him on all those social media platforms. If anything else for me, hit me up in the comment section below. As always, I'm the Bearded Realtor, and I'll talk to you soon.